I want the SEC to rapidly approve the tokenization of bonds and stocks.
Blockchain is a technology ledger system that we use to move information.
I would encourage you to look at a project that I'm starting to focus a little bit on called BITTENSOR.
So as you may know by now, the entire mission of this channel is to make life-changing returns by investing in early-stage assets that have explosive upside because they're part of enormous mega trends. One of the most obvious examples of this was the early days of the internet. No one understood it. Amazon cratered 90% several times across a few years, but eventually the revolutionary nature of the technology emerged and it went on to 600x and make the founders and early investors billionaires, right? So what is the secret sauce? It's being able to see the future. If you knew how big e-commerce would be and how big cloud computing would be, it'd be very easy to invest in Amazon early on. And so the only mission today when it comes to investing, because we're not wasting our time on 5, 8, 10% returns. We're not going to leave the matrix and reach financial freedom doing that unless you're already super wealthy and you're preserving your wealth. But if you want to escape the matrix and be financially free, we have to find those life-changing assets, right? So let's look at the future that's being built by the most powerful people on the planet, because that's going to give us a very clear indicator as to what the future is going to look like. Then it becomes easy to figure out what to invest in. So to start, let's take a look at Jamie Dimon, the head of the largest bank in the world, JP Morgan.
Blockchain is a technology ledger system that we use to move information. We've used it to do overnight repo, intraday repo. We've used it to move money. Right. So that is a ledger. That's a technology ledger type of thing that we think will be deployable.
So he's clearly admitting that blockchain has utility that his multi-hundred-billion-dollar bank is going to be using, right? So right there, it's an admission of how valuable this technology is going to be, right? That's an older quote. This is a brand new quote in 2025. I think there will be really use for blockchain and stable coins. We have the thing called the JP Morgan deposit token. So you can move money into JP Morgan deposit worth par wherever you go. JP Morgan is a major user through platforms like Onyx. And Onyx, now rebranded as Connexus by JP Morgan, originally runs on a blockchain platform rooted in Ethereum technology. Specifically, it's built on Quorum, an enterprise-focused permissioned blockchain that JP Morgan developed in 2016 as a fork of Ethereum. So Quorum isn't built on Ethereum, but it's a clone of Ethereum. It's the JP Morgan's private blockchain. So most people would look at this and say, well, how is that bullish for assets like Ethereum and crypto when JP Morgan has all their technology in-house? Well, again, let's dive deeper into the future these guys are building before our very eyes. Here's Larry Fink. We're going to see how it all works together, but here's Larry Fink, the head of Blackrock.
As a huge believer of crypto and blockchain and tokenization, I want the SEC to rapidly approve the tokenization of bonds and stocks. That will simplify things, make things easier. Some of the tax on Blackrock would never have to vote on a proxy vote anymore because every owner of record would be notified through a tokenization of equities. And it would save more money for more people. It would bring down the cost of ownership of stock and bonds. So those are the type of financial reforms we need.
Okay, so those are the types of financial reforms we need and the type of financial reforms we're getting. He's talking about the entire stock market, the entire bond market tokenized on these blockchains. Now, what crypto assets are going to benefit from the tokenization of tens of trillions of dollars of the world's value? Well, again, let's dive deeper down the rabbit hole. What technology are these organizations building on? BlackRock leads $47 million round for Securitize, another step in the evolution of our digital assets strategy. That guy is Carlos Domingo, the co-founder and CEO of Securitize. And this is what he said very recently about what technology they're using.
You can see a world where I can take an oracle from Chainlink that actually injects in the smart contract the NAV calculation on a daily basis, and then the smart contract is rebasing and issuing new tokens all the time without any blockchain transaction. And then that completely eliminates human intervention, human error, like everything disappears and everything collapses in one place. Everything is software, everything is automated. And this is, a huge, huge cost saving, which translates into better fees for customers, into more efficiency markets, etc.
I can see that world as well.
It's coming. We'll do it together.
So I don't know if you've seen that clip before, but it speaks again to the world the most powerful people on the planet are building. Imagine if you could, again, look into the future and see how big Amazon would be. Well, these guys, it takes some research, it takes some digging, but you can see exactly what they're building. They all understand how important blockchain technology is, and they're building a platform to tokenize tens of trillions of dollars of the world's value. And Securitize, which Blackrock is using, plans on using CHAINLINK's blockchain architecture to secure and provide the data needed to power all this tokenization. What about JP Morgan? Right? JP Morgan has their private blockchain. Now, JP Morgan is part of the SWIFT network. The SWIFT network is a network of 11,000 plus banks. Let's see what one of the leaders of digital asset transformation at the SWIFT network said, because again, JP Morgan, which fully acknowledges how important blockchain is going to be, fully acknowledges that they're going to be using it. JP Morgan is part of the SWIFT network. So that's going to give us an indication of what technology JP Morgan is going to ultimately be using if they want to be part of the SWIFT network.
More and more of the banks and institutions are actually launching their own tokenization platforms. They're starting to test out this technology for the potential benefits that it can bring. It's natural for us to try and step in and be able to support our community with interacting with those. And so when you look at Chainlink and Swift, I mean, Swift has over 11,000 financial institutions today, 235 plus market infrastructures. But Chainlink is a strong complement in the sense that they have all the integration to all the different blockchain networks that exist today. So why would Swift think it's in our best interest or the community's best interest to try and go and integrate with all these different blockchains and all the different kind of know-how that you need to have to do that when you have a strong player and a partner in Chainlink already that's doing that today? Institutions don't know which blockchains they're going to have to connect to, or they know what they have today, but in the future, like how do you know in 5 years these blockchains will be around? And they don't want to have to go and invest in entirely new parallel infrastructure in order to do that. So they have all the investment that they've ramped up in Swift for a number of years. And when you think about a return on investment and kind of speed to market, can they just leverage all the existing infrastructure, processes, connectivity, messaging, et cetera, to be able to access these new networks, right? And so that's kind of what we've done with Chainlink. You know, we successfully demonstrated that from a technical standpoint, and a number of the institutions that are members of Swift are also having conversations with Chainlink.
It really doesn't get bigger than that when you understand that he's speaking for over 11,000 banks around the world and what technology they're going to use. He's essentially saying there's no competitor. Chainlink makes it easy for all these banks to connect to the new internet that is being built. Now, where does this leave JP Morgan? As much as Jamie Dimon doesn't want to make crypto investors rich by paying public architecture, decentralized architecture, here's the truth. JP Morgan could technically operate without being connected to Swift, but it would be a logistical and strategic nightmare for a bank of its size and global reach. Swift is the backbone of international payments, handling secure messaging for trillions in cross-border transactions daily. JP Morgan processing nearly 10 trillion in payments daily across the 160 plus countries relies heavily on Swift for its efficiency, standardization, and network of over 11,000 financial institutions. Without it, the bank would lose seamless connectivity for high value and cross-border transfers, which are core to its business. So in order for JP Morgan and Jamie Dimon's bank to connect to the financial system, which they're heavily reliant on, they're going to have to use Swift. They're going to have to use Chainlink, which Swift is using, right? So all roads so far in this discussion from the most powerful people on the planet, Larry Fink, Jamie Dimon, lead to using Chainlink as the global future infrastructure layer of the new internet. So let's pivot over to Silicon Valley. What are some of the most influential people in the tech world and the government world saying about certain blockchain assets? This is Chamath Palihapitiya explaining BITTENSOR.
It's like this Web3 model does actually apply here, where there are some really interesting early adventures in crowdsourcing technical completion. I would encourage you to look at a project that I'm starting to focus a little bit on called BITTENSOR. And I was like, what is this thing? And it's basically a thing where you go and solve technical problems and produce features that people require, that need, and you get paid in this underlying currency. That is actually a distributed form of venture that actually makes sense.
Like
in
a bounty?
Essentially,
Yeah.
We're like, 15 companies that need a replacement to Salesforce just say, here's the bounty and here's the feature set. And it's a crowdsourced or a community sourced PRD. and then some LLM spits out the code. Like that is this crazy new world that we're going to. So it's all about speed of execution.
The person he's sitting next to, this person is David Sachs. And we're going to get into who David Sachs is and why that's important. But what Chamath is talking about is the revolutionary nature of BitTensor. We cover on this channel how Barry Silbert, a multi-billionaire early stage investor in Bitcoin, is pivoting heavily into TAO. And essentially what BitTensor is it's similar to Bitcoin in that it has a 21 million fixed supply, but instead of paying miners to solve a hash problem, it pays the smartest people on the planet to solve real world machine learning problems or science problems or whatever the community finds valuable. And so at the current price of BitTensor, the budget of TAO emissions that it's giving to the smartest people in the world to create the most revolutionary technology on the planet is over $1 billion per year. So these subnets that BitTensor is paying are starting to earn tens of millions of dollars per year in revenue. So they're all like these AI startups. And so we cover TAO a lot. It's massive. Barry Silvert's huge into it. We have Chamath noticing it. We have Silicon Valley starting to notice it in a big way, right? It's decentralized. That's what makes it crucial. It's like a chain reaction in cyberspace. It can't be shut down. And so again, David Sachs was sitting right next to Chamath when he was describing this revolutionary technology. Who is David Sachs? He's the White House crypto czar, and White House crypto czar David Sachs says his first priority is stablecoin legislation. So what they want to do is grease the wheels for trillions of dollars to move into the stablecoin world, to run on top of blockchains. And so what happens when trillions of dollars of stablecoins flood the blockchain world with liquidity? A lot of these high quality assets absolutely pump. So crypto czar David Sachs says clear rules of the road for digital assets could be set within 6 months. So that's February 9, 2025. Expect later in the year, potentially coinciding with a massive bull market as the floodgates open for trillions of dollars of institutional capital to pour into the space. Why do they want that to happen? Because crypto czar David Sachs sees stablecoins creating trillions in demand for US Treasuries. So this is kind of like their strategy of creating a huge amount of demand for US Treasuries, because as money pours into these stablecoins, the stablecoin issuers buy US Treasuries. So that's a huge source of demand for United States government debt. Right? They're using crypto as a tool. And so they're literally doing everything they possibly can to make sure this space thrives. Trump's SEC drops lawsuit against Coinbase, delivering victory to crypto giants. So we have Dominic Williams, the head of the Definity Foundation, which is building the internet computer, excited by this. Fantastic work by Coinbase bringing this misguided lawsuit to an end. It's a win for the whole crypto industry. Let's bring the focus on innovation and wider adoption. He's obviously very excited that the floodgates are about to open for institutional capital into these assets, because institutional capital is smart money. They hire analysts to figure out which assets have the best fundamentals. And what no one realizes is that a lot of these assets are cash flowing businesses. They're decentralized businesses selling a service. CHAINLINK is selling its blockchain architecture. ICP, the internet computer, is a world computer selling compute attached to a tamper-proof blockchain. That's what a lot of these blockchains are. They sell block space. Well, it's not just a blockchain. It's a world computer. So when you pay the network, you're paying for compute, you're paying for data storage. No other blockchain on the planet can currently house pictures, data, and compute all on chain. ICP is the only one. So again, when this institutional capital floods into this space, they're going to look at charts like this, which compare the revenue generated by these protocols. And so what we can see is that the internet computer, out of millions of crypto assets, is the 23rd highest ranked crypto asset in terms of revenue generated in the last 90 days with $6.7 million. Again, this is all in the depths of a crypto winter where there's no smart money in the space. No one understands what's going on. So if you can be a high quality asset generating this much capital in a crypto winter, you're going to survive. You're most likely going to thrive if you're the 23rd asset currently ranked. Who is the internet computer beating? It's beating the BNB chain, which generated $6.4 million of revenue in the last 90 days, right? BNB chain's market cap is in the tens of billions of dollars. So it's a massive asset. ICP has a tiny market cap, and it's making more money than BNB chain. So again, institutional capital is going to realize one day the deep value in the internet computer. Again, it's making more money than the BNB chain. It's making more money than Injective. It's making more money than Telegram, a multi-billion-dollar tech company's blockchain ton, which only made $3 million in the last 90 days. More than Avalanche, right? How much money has Avalanche spent on massive partnerships? It's only making $3 million. ICP is making double that. The internet computer is making more than Near Protocol. A lot of hype around that asset. It's making more than Polygon, which only made $1 million of revenue in the last 90 days, right? ICP is a cash cow because it provides compute, it provides data storage, it does a lot more than what these other blockchains do. So it doesn't need the adoption of Solana to make more money than Solana and to go hyper deflationary and to cause the price of the asset to spike from all the buying pressure. That's how it works. The more revenue, the more the network gets paid, the more deflationary it goes because tokens are burnt. So smart money is going to realize this one day. That's why Dominic Williams is very excited that the US government is supporting this space, right? Because smart money is going to change the game, right? They're only going to invest in assets that have incredible fundamentals and cash flow, right? So just unbelievably massive for the world computer. So the most powerful people on the planet are building the future before our very eyes. We have the government greasing the wheels for trillions of dollars of capital to flood into space. We have Wall Street greasing the wheels for trillions of dollars of capital to flood into the space. That's what Blackrock is all about, managing capital. They want the world's stock markets and bond markets tokenized. That's going to float onto these assets. Chainlink's going to benefit. We have Silicon Valley noticing BitTensor. We have David Sachs, who's the head crypto czar, also with BitTensor on his radar. And so investing for life-changing returns gets really easy when these assets are selling off at deep, deep, deep discount. And the smartest people on the planet are telling you that they're going to have a role in the future.